What if I told you the market wasn't just moving randomly, but was often being quietly guided into a tight range by some of the biggest players? In the next 20 minutes, we're breaking down two dank strategies that exploit this very phenomenon. Range trading, created by massive SPX options flows, and trading critical dealer levels derived from market mechanics. You'll walk away with a clearer understanding of how to spot these setups, and more importantly, how to trade them. Welcome back to Dank Strategies, the show where we demystify the markets for the active futures and index trader. I'm your host, Johnny DankSeed, and today we're diving deep into two core concepts that can seriously up your trading game. Our goal is simple: give you the insight to find high probability levels and the confidence to act on them. And remember, for those of you that want to dive deeper, all of the proprietary tools we mentioned today can be found over at DankSeed.tech. And you're also welcome to join and visit our free Discord, where we give a lot of this information out for free. Let's kick things off with range trading. Have you ever seen the market just chop back and forth all day, seemingly stuck between two levels? That's often not an accident. It can be the direct result of large institutions selling massive SPX Iron Condors. Here's the simple breakdown. When these big players sell an Iron Condor, they are essentially betting that the market will stay within a specific range until expiration. To protect their position, their hedging activity can actually create a self-fulfilling prophecy, applying selling pressure at the top of the range, near the short call strike, and buying pressure at the bottom, near the short put strike. This is a pinning effect. To give a little bit more information as to where these mechanics may appear, they usually come from trade initiations from large institutions or hedge funds. They will sell a high volume of Iron Condors, collecting premium by betting the SPX will stay range bound. Sometimes it's risk management by market makers to remain neutral after facilitating a trade that they must hedge their risk by buying or selling the underlying SPX components, creating initial buying or selling pressure. And then the gamma effect by market makers. As SPX price approaches the short strikes of the Iron Condor, market makers must dynamically adjust their hedge. Hedging activity accelerates, buying near the bottom of the range and selling near the top, potentially creating a resistance. Now, just to give you an idea of what it would look like, I'm going to go ahead and plot the levels that I gave out in the Discord for today, 9/29/2025 for SPX. And just before we continue, I want to give you a little bit of a fair warning here. These levels are actually not fully correct, and the reason why is my ratio, my calculations for my bot are a little bit off right now, but I've made adjustments this afternoon to correct them. Usually this can happen after large OPEX options expiries, sometimes rebalancing and SPX, things like that. It might throw the ratio off by a little bit. So I'm going to, again, keep very transparent and honest with you guys, and I'm going to be using the levels that I provided literally this morning in the Discord. So if you notice, they'll match right here. The 6666 level is matching, and 6656, which is the first range that we had in the morning over here. Now, to give you a little bit of an idea, the simple objective here is, as a retail trader, how do we trade this, right? And generally, whenever we're above the range, you want to take bets that it'll go back down into the range, and anytime that you're below the range or at the bottom of range, you want to take bets that it'll get back into the range as well. The playbook is pretty straightforward when you think about it. Go long near the identified bottom of the range, go short near the top. But we don't blindly sell resistance or buy support. We need additional confluence. To give you an idea of what this looks like with the corrected ratios, I want to go ahead and update you. And if you notice, it actually made a little bit more sense. If you notice, it did hold the bottom of the range here for the beginning of the morning. We got to move up into the top of the range where we basically met a sort of resistance and sold off. Once it was sold off, if you notice, the range shifted here, which are mechanics that can happen intraday. And I try to keep everybody aware of these mechanics and updates. So for example, I had this plan here this morning, and my initial plan was to buy this bottom of range over here and get longs. But once the range shifted, obviously my plan is going to shift. You know, if the range is dropping and I don't think it's going to hold, or the bets have been changed, in this case, if you notice, the range shifted down to here. So 66.46. In this case, I'm going to go ahead and change back to my original levels so that we can match what was being said in the Discord. So like I said, my plan initially was to long here, but then I went ahead and updated the plan, and then I wanted to long here. And that was my plan for essentially the rest of the day. Now, did I short down? If you're feeling, confident, yes, you can short downward to try to get a move within the range. However, you don't want to be, grabbing random trades in and out here, especially if you're expressing your trade in options, for example, because you'll just basically be chopped up and your premium will be eaten away. So I generally try to wait for literal extremes and only extremes, unless I have other key information. For now, let's just go ahead and start adding some of the proprietary tools that we use here to try to get a read on this. So this is a volume identifier that I use very commonly for these types of plays. And if you notice, we had a strength factor here along with a downward rejection near the bottom of the range. Now, if you would have seen something here that gave you a little bit more confidence aside from this, let's say you're watching the flows, SPX flows, things like that, and you see a flip, that would have been a great long. Whether, again, you express it in futures, options for SPX, options for SPY, whatever it may be, this was a decent long. We see a volume exhaustion here and a fight breakout. And then if you notice, we had this weakness down to test what was at this time, like I said, a little bit of error on my behalf of the calculated range, but then it recovered it, and then we got a nice rally into the end of the day. So that's our volume analysis. And now this is to check extremes. This is the reversal indicator that I sometimes use. And if you notice, during the beginning of the day, we were already running what I would say hot, which usually means that we're going to be limiting upside. We're not going to be able to get further up. If you do match that along with the other trend line that I was speaking of, then obviously, it makes sense. Down here, we started finding support. And if you notice, it's getting up, trying to recover price every time that we approach these levels. Now, again, you can take these signals on the reversals as you want. However, I try to always wait for this type of factor right here, where if you notice, we have a green box near the bottom of the range, and then we have a recovery. So this would have been a good example of a long. So we have the reversal. Then we have, this is a trend that we built. Mainly it's trying to be as lagless as possible. And we also have two trend lines that it tries to form. And it tries to let you know what the previous trend was and what the future trend was. Or is, sorry. Once you get this type of information, you can then use all of this information to find a confluence. And I'll give you an example here. If we go into the replay mode, and if you're expecting, remember, we're expecting this, then that's what you plan for. And you start watching anything having to do with flows, options, your trends, whatever it is that you rely on a lot to trade. Whatever your system, your method is, again, that's the beauty of this type of trading, that you can incorporate it into your trading. You don't necessarily have to abandon anything that you already know or change anything you already do. You can simply just incorporate these types of, I guess you could say, pivots and levels into your already existing trading. And this is a great example of that would have been kind of where you're trying to look for your exit. If you already got a recovery here from a reversal, bottom of range, and then you even broke up above this lagless trend that we have, and then you're running into this, and then you start seeing weakness and volume exhaustion, and you're also running into the resistance of the reversal indicator, as well as nearing the top of that current range, then that's not a bad trade. I'd like to get a little bit more into well, does it always work? No, I don't want to guarantee 100% on anything in the stock market, because the stock market will do what the stock market wants. At the end of the day, this is just major players in the stock market taking a bet that the stock market's going to behave a certain way. And usually I tend to notice that these types of bets pan out or pay off better during lower volatility days. So for example, today, Monday, was fairly low news incident day. We did have a little bit of news, but it wasn't very, I guess you could say, volatility packed. So if you notice, this is, I went ahead and turned on the range again with the new and improved, the updated ratio, I guess we could call it. And if you notice, up here it held in range. Once the range dropped, it allowed the price to go further down. And then also, once the price met down here to the bottom range, it tried to recover a couple times, holding the bottom of the range. And then here, when we got below range, it obviously always wanted to push back up into the range, right? The next thing I want to talk about real quick is, let's move on to something a little bit more nuanced, but incredibly powerful, right? I'm going to remove these lines, and I'm going to bring up trading dealer levels. This revolves around gamma exposure, GEX, famously referred to as GEX, dealer positioning, some Vanna levels, things like that. Don't let the jargon scare you. The core concept is very intuitive. Thinking of gamma is like a force field around prices. When gamma is positive, usually price will try to repel. It can repel both ways, but it tries to stabilize the market, and that can lead to those choppy range-bound days we just discussed. When gamma is in the negative, I guess you could say, in reference to the dealer levels, it does the opposite, and it attracts price movement and can accelerate trends. And this leads to dealer positioning. If dealer gamma is negative, it means the market makers are net short options, but their clients, the bigger funds, or even just retail traders en masse, I guess you could say, are net long. And why does this matter? Because when clients are long, they're generally betting on a directional move. So a dealer negative level is a place where we should be looking for longs, as it's a level where buying interest is likely concentrated. Conversely, dealer positive means dealers are long gamma and their clients are short, and this suggests that big players are hedging or betting on a downturn, making a dealer positive level a good place to look for shorts. Vanna flows obviously have their own special mechanic that I'm probably going to go into a deeper dive in a separate video. The effects of changing delta as implied volatility shifts, which can cause these levels to act kind of like magnets as well, especially during OPEX or volatile news events. So just to give you an idea of what this should look like, I'm going to go ahead and enable them. And this is the levels I had for today, I guess you could say. So if you notice, I'm gonna turn the replay mode off real quick. And if you notice, right here is a key level that you can see that I mentioned here in the Discord. Dealer negative, right? 66.46.50. Now what this is going to do is this is going to act, and again, if the dealer is negative, the customers are mostly net positive, so it's going to be on the move up. You're going to want to be betting with the customers, and the reason why is the dealer doesn't care. The dealer is hedging, right? He's always trying to maintain neutral, but in this case, there's a lot of bets or customers trying to bet from this level that it'll go up. So if you notice, we did have those types of effects visible here, and then definitely here at the end of the day, right? And that's the kind of trading style that I personally like to employ here. And this is mostly due to the fact that I'm always looking for the lowest risk for the best reward. I will always be looking for that. The reason that we, try to look for this is we're not trying to trade anything in a vacuum. We're not trying to trade in no man's land, is something I'll refer to it as. Let's say we have a key dealer negative level on our chart, and then again we can also do the same thing where we'll add on our indicators. and then it gives us a little bit more of a view, especially once we combine it all together. And again, I'm using the Discord levels that I published, which if you notice, there's one right here overlapping with the dealer level. So if that at the time of my calculation earlier today was the bottom of the range right here, and then we have the reversal indicator, we broke up above the trend again. I was expecting this. I was looking for this. This was my trade plan all day, all morning, even before we approached that price. And that's the advantage I'd like to point out. Basically, we're just confirming that something happens here. We're not predicting it. We're confirming. We want to make sure that other people are stepping in, other things are happening. And this is basically very key. Always wait for that confirmation. Can you bet? Can you start grabbing, sizing your position in this bar? And then keep sizing in as you go in. And if you're that kind of a trader and you're that well versed in futures, SPX options, SPY options, whatever it is you normally trade, sure, no problem. Go for it. But I want to make it clear that the general advantage is, try to get the extremes whenever you can. Like I said, this is a very more nuanced look, at least at today's activity. Obviously, going into tomorrow, the ratio has been cleaned up for what I mentioned a little bit ago. Obviously it might have been off because of Friday's events, but my ratio is cleaned up now. So like I said, if you notice, here's the range here, the range dropped to here. So if you notice, we had a defense here. And then again, what helped us here is this, the dealer level. Now, if you really want to get, I guess you could say, a little bit more detailed, and why I personally like trading these levels a lot, you need to look no further than here. Here are the levels on, this is the day on ES, and this is the day on NQ. And if you notice up here, we had a GEX positive that repelled the price down, and then a dealer level here that also kept us repelling downward. And then over here, we had another dealer level that, I'm not trying to brag here, but it basically nailed the exact level. It was off by 25 cents, and then it rallied from there. So let's bring it all together. If you look at this on the daily, let's say you don't even use my indicators yet. You don't have access. It's cool. It's fine. Just use the information that we already provide, and you have a picture. You're not taking random trades here, 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 wherever. You're looking for very high probability pivots, and you're acting on whatever you already use, whatever your trading system might already be. So let's bring it all together. Range trading gives you boundaries for the day. In this case, we calculate the Iron Condor for 0 DTE, while dealer levels give you a more nuanced directional bias that you should be looking for and confirming. We're not trying to predict. The market will do whatever it wants, but this at least gives us an idea of what might happen with a little bit more certainty, as opposed to just trading the blank chart. Used in tandem, they form a very powerful framework for understanding daily market structure. The best way to learn is to see the levels live and discuss them. That's why I want to personally invite you all to join our completely free Discord community. We have hundreds of active traders sharing ideas and talking through these setups every single day. The link is in the description below. That's all the time I have today. If you found this valuable, do a solid and smash that like button and subscribe. Feel free to share with your friends for more dank education. Until next time, we'll be back testing these strategies against the last month's FOMC volatility and other events. But in the meantime, stay sharp and trade smart.